Hi ladies, I'm Annie from Style Collective and we are here with Amanda Russell for part 2 of our business tax series. The first part was all about LLCs, how and why you need to set one up, and now we are going to dive into business and blog expenses. What do you need to track? How do you track these expenses? And we actually went into our member forums and pulled questions from you ladies that Amanda will be answering for us today. So the first question that we have is from Mindy, and she's asking that she signed up with Massive Sway, but to sign up for any collaborations, they want her to fill out a W-9 form. Is this normal? I'm fairly new to this, so I'm not sure if this is something that many influencer sites ask for or if they don't. Who can help me with this? So Amanda, what do you have to say about this?
Yes, so the W-9 is just like when you're an employee and they ask you to fill out a W-4. You're giving them your information, your social security number and address so that they can file you a Form 1099 miscellaneous, which is what you get when you're self-employed, and report that income to you and the IRS. And whether or not they send you that form, you're still supposed to, report it and all of that, but that form is very standard. And if you're paying anyone to do work for you that you think you're going to pay them more than $600, you can have them fill out the W-9 as well. It's just a professional way to ask for someone's, social security number and that personal information.
Okay, awesome. That's good to know. Is there just a quick little one-off question, is there like a certain threshold of income that's usually best practice, or is it just good to send this form?
Well, so it's good to ask for that form up front.
Yeah.
Right? Because if you pay someone and then you get to the end of the year and you're like, okay, can I have your information? I'm going to file you for taxes.
Yeah.
People are kind of like, ooh, I thought.
Yeah.
Whatever, I was just going to keep that between us. So it's good to ask for it up front, but you only are required to file the Form 1099 miscellaneous if you pay them more than $600.
Okay, gotcha. Perfect.
But you can, if you're paying a lot of people, I usually recommend just planning to do it.
Yeah, just do it all up front. It's just easier. Then you don't have to chase people down at the end of the year. And it's another thing you don't have to worry about.
You can ask for that form and then not file them at 1099 if you don't end up paying them $600. But it makes you look really professional too. Like if you hire a social media expert or a website designer and you ask them for it makes you look professional as well.
Perfect. All right, so next question. Jordan is asking, how much incoming gifted product for a non-paid post is enough that you need to file?
So gifted product, you mean like the company would send you maybe like if it was Gucci, they send you a bag and you're using the bag in the...
Yep.
Okay.
Yeah, so they're going to sponsor the content just by sending you some product, but they're not actually going to pay you outside of the gifted product.
Yeah, so typically I would recommend documenting that you use that for business for them, and I would not file it as income.
Oh, good.
Yeah. If you think of it from the purpose of them sending you that was for business. Now, if you didn't take photos with it and do the steps on your blog that you're doing for business, if you didn't do that, then yes, it would be considered income and you should report it.
Okay.
However, if you're using it for business, there's an important step though, is documenting it. So, the paperwork that they send you, or even just a piece of paper, and writing down, like, this is what it was used for, these different posts on my website, the dates, whatever information you can kind of think of, and documenting that it was for business. It simply wasn't required for you to send the merchandise back. You know what I'm saying? But it was not, if you think about the intent, it was not to give you that purse, right?
Yeah.
So, and while it is kind of a perk, you do get perks.
Yes.
Yes. And if they send you a 1099 for the fair market value of the purse, which I would find unlikely for them to do that. Do you find that they...
No, I don't find that people are saying that. I haven't heard that.
Yeah, I wouldn't think, if they do that, you just want to document it really well that it wasn't, and you might want to just report it if that were to happen because it might be easier.
Okay, gotcha. So that's good. That's really good information because I hear a lot of other different feedback from people online. So this is kind of refreshing. Yeah.
In income, like a lot of tax people, they might say include it because they're thinking of it as a gift.
Okay.
And they want to err on the side, if you report it and you don't have to, you can't get in trouble, right? So they don't want to tell you something that's wrong.
Yeah.
So they're going to tell you like on the extreme side, like report
gotcha.
it, because they don't want to be liable for trouble and then da. However, I do understand the industry and, from my tax background, you don't need to.
It's overkill.
Exactly.
Okay, perfect. That's good news. All right, so Caitlin has a couple of really good questions, and the first one is how to distinguish between income from partnerships/affiliate programs versus gifted product, and what counts as taxable income versus not. So we already covered the gifted products. So if you're getting income from partnerships, meaning a brand is paying you to advertise their products in addition to giving you the gifted product, or you're also making money from affiliate links, how are you supposed to report that?
They are probably, if they haven't, they're probably going to start sending you Form 1099 miscellaneous with amount in box 7, reporting that as income. If they're paying you money, that's going to be your revenue from your business, and you're going to want to report it with your business. You will be able to deduct your expenses, of maintaining your website and everything you did to promote that link and earn that money. You'll be able to deduct it from that before it goes to taxes, but that would be considered taxable income.
Okay.
So I get a lot of software for free because I help businesses set up their systems, accounting software, time, invoice software, all of that. I get it for free. The part that I use for free, I don't pay tax on. Just like the gifted products, if they're sending you products, I'm not including in income the value of my free access to the software. But if my clients sign up and I get a check for promoting the link, I pay tax.
Okay, gotcha. Perfect. What are the ramifications on setting up the business in one place, such as a given address or, more importantly, a given state? So, for example, setting it up in New Hampshire and you're likely to move in the foreseeable future. Is it costly to change, or can you set something up in a state that isn't your primary residence? So you actually would know best more than anyone.
My business is out of New Hampshire and I'm in Hawaii a lot of the time. But so typically you hear of bigger businesses, which is probably where this is coming from. You hear of bigger businesses, forming their business in Delaware or states that are friendly. That is a whole other level of complexity.
Okay.
Wherever you live, you're going to be required to file taxes.
Yes.
So you typically want to form the business where you live.
Okay.
If you're moving, it may make sense to form the business where you move.
Okay.
If you have any doubt as to if you're going to move, I would typically recommend just forming it where you are and then looking into the state to change states when you get there.
Okay.
Every state has their own rules.
Yeah.
So you do have to look at the states. However, states are very helpful. So you can search, if it was New Hampshire Department of Revenue or Department of Taxation, find a phone number, and you can call them and say, hey, I'm just moving, I'm doing business, what do I need to do? And they are typically very helpful. Now, you can't do that for federal. They are really, they're used to that, and they want to help you do it right.
Okay. Okay. So, but are there any ramifications, like if let's say I'm actually thinking about, moving down south to Raleigh, North Carolina, if I decided to keep my business in New Hampshire and I move in a year and I move to Raleigh and that's now my new primary residence and I don't change my business from New Hampshire to North Carolina, what would be the ramifications of that?
So you would have to continue filing in the home state,
Okay.
which is why you would typically want to move your business. Now, New Hampshire is a special situation because it's one of 7 states that do not actually have income tax.
Yes.
However,
but they do a business tax.
Over 50,000, there is the business tax. So if you move and you're over that threshold, or even if you're not, you probably want to move your business to your state. Otherwise, you're going to still be having to file in that state and in your home state.
Oh, okay.
That's why, see, these big corporations that do it, they're filing in every state anyways.
Okay, gotcha.
That's why it's advantageous for them to have their home state to be a very friendly state. With us, it's not advantageous because we're not filing taxes in every state.
Yes.
So we want to keep our business at home.
Gotcha.
For me, New Hampshire is a far more friendly state than Hawaii. So that's why, and because New Hampshire is really my home, I keep my business.
Perfect. All right. Next question. Does it make sense to get tax/legal help with any of this? If I usually do my own taxes, should I be getting some time with a professional? If so, what credentials should I be looking for?
That's a super good question.
Yeah.
It's a really fine line. We touched on it a little bit in the last video. It is a really fine line because if you're not making a lot of money, it doesn't make sense to go pay someone a ton of money.
Yeah.
The IRS does audit based on thresholds. I mean, the truth is, if you're not making that much money, you're better off spending that money in your business, growing your business, and hiring professionals. So I say that being said, a lot of times the difficulty is finding someone good when you're very small, who's not going to, who doesn't deal with bigger businesses and charge proportionately. So you just want to really, you can call around, don't get discouraged. You just want to be honest with them about the size of your business and ask them if they can help you. And you're going to get people saying, I'm sorry, we don't work with people that size, because they know that you don't want to pay $4,000 to talk to them.
Yeah.
Or to have them try and help you. And so they want to be honest with you. And that's okay. So just know that. And then the credentials, so you can totally, DIY software. I recommend Free Tax USA.
Yes, we talked about that in the last video.
Super cheap. So, and, just when you go through it, those softwares have a lot of information. What I find is when people are overwhelmed and stressed out, sometimes you don't want to go near this. And that's fine too. Hire someone. For someone to do your personal tax with a Schedule C, you're self-employed, they don't actually have to have any credentials. Now, when you create a separate business, then they do. So if you make, a partnership or a corporation or an S Corp, then things get far more complicated. So I recommend staying away from that until you're at the 100,000 mark. That's my new way to say it simply. Get to the 100,000 mark and then deal with all that.
Wait, 100,000 in revenue or profits?
Ooh.
Ah!
I would say more like your profit.
Okay.
Because if you're spending 80,000 to get 100,000 and you're taking home 20, it's still not really worth it. Now, as you get higher up, I would kind of take that back because you are dealing with a lot of cash flow. That's not a question a lot of people ask Annie when I say that. But that's true. But the more cash flow you get going, yes, exactly, then it does become kind of more of an issue. You can go a little bit further, but until you're making that much from your business, you probably don't want to pay $5,000 on
No, you don't.
And that's really what it costs to hire the lawyer, to pay for your W-2 company, payroll company, to pay for the tax, to pay for the accounting. It's going to cost $5,000 or $6,000.
Okay.
So keep that in mind.
Yes, definitely.
But with the certifications, enrolled agent is I'm that, and it's what a tax person is. And then a CPA is also. CPAs don't necessarily have tax background,
Okay.
but they can. But those are the two certifications.
Okay, perfect. Stephanie asked, what do you consider expenses? Obviously, my laptop was bought exclusively for blogging, my camera, lenses, photography, etc., but where do you draw the line? Do you go as far as expensing your hair, your nails, tan, beauty items? It may seem like a lot, but I spend a lot of money on my hair and tan to make myself look better in my pictures.
Okay, so the first thing you want to think about is business purpose.
Okay.
If it has a business purpose, you write it off.
Business purpose meaning?
Meaning the only reason you would have not spent that money if you were not trying to earn money from that business. So
Okay.
that just threw hair and nails out the window.
Okay.
Because you wouldn't have spent the money, and I'm going to come back to hair and nails.
Okay.
That's the first basis. All of those are expenses. If you wouldn't have spent it, other than the fact that you're trying to earn money from this blogging business and from these brands, then it's write-off.
Okay.
Great write-off. Now, you do want
Good.
one thing I recommend is writing on the receipt what the purpose was.
Yes, documentation always.
Yes. And then you're good to go. Or in a spreadsheet, if you keep track in a spreadsheet, you can make a column for that.
Mm-hmm.
With the computer, when you buy stuff like that for business, it's a write-off as well. Now,
Okay.
this is where it gets a little tricky because when there's part personal use,
Okay. Yeah.
we have our straight business expenses, and then we have business expenses that have personal use.
Okay.
Things get complicated.
Yeah. It's like cell phones too, right?
Yes, exactly. So your first, and all of them have specific rules. If you use DIY software, you will be able to answer all the questions about this. They ask all the questions. They're set up for this.
Okay.
Now, tax professionals tend to be a little more strict. So they are going to be like, nah. Now, part of the reason why is because the rules get complicated. And if you want to pay $200, $300 for your return, they don't want to get into every little tiny thing with you because then they're going to have to charge you $1,000.
Mm-hmm.
And so there's that fine line, and you'll find different people deal with it differently. So if you find someone good that you get along with or that's doing it for cheap, hang on to them because this is not an ideal, easy, simple thing that you should find for $100.
Mm-hmm.
TurboTax costs $100. So where are we in that answer? So
laptops and cell phones and, right, you deduct a percentage.
They have very specific rules.
Yeah.
So with a cell phone, your first line, when you pay for your cell phone for personal, that's not deductible. Second line that you get for business purpose or specific calls, which nothing charges for that anymore, but you can write off that. So if you pay for a second line, that sort of thing, you can write that off.
Okay.
And again, it's documenting it. Now with a laptop, you can do one of two things. And I'm kind of a fan, especially when you really like a camera and stuff like that, stuff that you're buying for business, you can write it off.
Okay.
You'll enter them as assets, or they're considered assets because you use them to make money.
Mm-hmm.
And you'll be able to write them off. Now, if you say you do use your laptop for personal, then you'll have to allocate the cost between personal and business.
Mm-hmm.
Typically, because this is going on a private site, I will say this, I don't think it's necessary to kind of allocate your personal use on your laptop, and I'll tell you why.
Okay.
Because when you work for a company, you use your laptop, you use your business computer to do personal stuff. All employees do.
Yes. And I know this for a fact because all of the SC girls are on the SC website while they're at work doing personal things. And it's just what, yeah.
Because it's like, how do you keep track of, you're supposed to allocate your personal, and so everyone estimates, but then that's not really accurate.
Yeah.
Anyways, now, so there you go. There's one you can kind of take take the commuter. On the other hand, I don't recommend taking nails, hair, and tanning.
Okay.
And the reason why is because, well, first of all, there isn't a straightforward answer. So there's no IRS rule that says you can't deduct hairs and nails. However, due to the personal nature of it, many people have gotten in trouble for deducting those types of expenses.
Okay. What if you got your hair specifically done, like at a blowout bar, because you were recording something or going to a conference or speaking at a conference? Like, what if it was the intent was for business and networking?
I'll tell you this. If you have a loss from your business, don't make the loss bigger with those types of expenses.
Okay.
If you are making substantial amounts of money and you document it, then write it off.
Okay.
And that's because it's not really a perfect system, but from studying case law of what happens when people fight their expenses, that's kind of a good gauge in when they get in trouble for it and when they don't.
Okay. That's a good rule of
You don't
thumb.
want to take a loss from your nails and hair, no matter really what.
Mm-hmm.
But if you have substantial income and you're not in a loss position, then go ahead and deduct it.
Okay, yeah, because like we discussed last time, everything is about intent, the intent to make money. But you, like you said, you don't want to be having a huge loss and then you get a flag.
Here's the thing with those with hair and nails.
Yes, the personal things are different though. I agree.
Yes.
Yeah.
Because although you get your hair done, the way the IRS looks at it is that there's so many other pieces to it that are mainly personal.
Yes. Yes. Like I remember hearing about Jillian Michaels when she got audited because her accountant was deducting wardrobe for her outfits that she was wearing on The Biggest Loser. And so that's always stuck in my mind as like a big no-no. Don't do that.
And it is like, I was going to say so much more about it. I'm like stopping myself. The simple answer is to say, yeah, you don't want to be earning $100,000 and deducting $100,000 and have a lot of that be from that stuff.
Yeah. Yep. Okay.
That's the
Awesome.
simplest way. But it has to do a lot with, there's no such rule. It's with people arguing about it in court. So,
Yeah. So you don't want to get to that point. Yeah. It's not worth it.
Exactly.
Okay. Awesome. So those were all the questions that we had. Thank you so much, Amanda, for taking the time to answer all of our crazy blogging questions because, we don't know what's going on. We hear different things all over the internet and searching Google. And so it's really nice to sit down with someone who can answer these questions in a really thoughtful way that understands the business. So if you ladies need any help or have any additional questions, you can contact Amanda and she's available for consulting. She's not going to rip you off and, she will help you with whatever you need. And if you have any questions at all, just leave us some comments down below on this post and I'll leave Amanda's contact information and her website so that you can get in touch with her for anything else. All right.
Thank you, Annie.
Thank you, Amanda.